Hey everyone, so if you're anything like me, then your LinkedIn feed will have been inundated with lots of people, mostly mortgage brokers, complaining about what the recommendations of the Royal Commission were. Now if you're not up to speed on that, it's basically that there's a Royal Commission into misconduct in the banking sector, and some of the recommendations that were made last week were essentially about the way brokers were remunerated, namely that they shouldn't be able to receive any upfront or ongoing commissions from a bank, and that those fees would have to be paid by the borrower themselves. Now, a lot of the argument that brokers have put forward has focused on more the fact, well, how am I going to get paid as a broker, rather than focusing on what it really means for the consumer. And really, when you consider it, borrowers shouldn't have to worry about how a broker gets remunerated. I mean, it's not your concern about how I put food on the table. And really, there's only something like 17,000 brokers in Australia, so it's not a huge industry. But where it does matter is basically what it means for consumers. So brokers have 59% market share, which means that basically 59% of all home loans in Australia are written by mortgage brokers. Now what this means is that brokers, because they're able to give their clients a choice, and for most mortgage brokers I think they're usually accredited with something like about 30 different lenders, it means that the big four lenders specifically have to compete on price where they didn't beforehand. So we've actually seen this very clear relationship with increasing broker market share and decreasing net interest margin on home loans, which means that as brokers have gained ground in home loan territory, it's meant that the big banks have had to basically drop their interest rates way down. So without brokers, I mean, there's a few other things to consider, but you could almost say that without brokers today, if you're paying 4% on your home loan, given that brokers have contributed to a 3% decrease in net interest margin rates, your 4% home loan would probably be something more like 7%. So lots of people are focusing on how brokers get paid, and really I think the focus should be on what it means for the consumer. And really, competition is good for consumers. It means that big banks are forced to compete on price, and it basically means that, you know, competition means you have choice. And it means that banks have to fight harder for your home loan. Now, what we can see, if the recommendations from the Royal Commission are implemented, it's incredibly likely that the banks are going to take full advantage of it and basically increase your interest rates to, you know, fatten out their profits like they were in the early 90s. So that's why I think, you know, more than anything else, more than how brokers get paid or why we get paid or anything like that, I think the bigger issue is that if you reduce competition, it will have a hugely adverse effect on what it means for consumers and how affordable it is for consumers to own a home.